Hi, welcome to LendED, our education series for 2021. What I'm really excited today is to talk to you about our new initiative, which is talking about small accounting principles for small business owners. Now, today we are very fortunate to be joined by who we class as a guru in the small business accounting environment is Davey Mack from Box Advisory Services. Welcome, Davey.
Welcome. Thank you very much for having me. I'm super excited to be here presenting. And since I'm the first, hopefully I make complete sense when I talk accounting and tax. I know it's a bit complicated sometimes, but usually I try to keep it simple.
And Davey, for those that already see you and watch you on LinkedIn, they're going to know that you are going to make this a very easy conversation for our first webinar series. Look, what we really wanted to do with this series was to bring, to lift the knowledge of our brokers of basic accounting principles and to give them some insights that not only will support their own business, but also give them some understanding in how they can support their clients a lot better. So I think we should just kick this off and get stuck into it. It's the right time to talk about end of financial year. So talk to me about some of the end of financial year tips that are really important.
Cool. Sounds good. So I'll start with right now, it's hitting up May 2021. So lodgements are usually due on the 15th of May 2021 for the 2020 financial year. That's if you use an accountant to lodge your tax returns. And as most brokers do, they do get the accountant to lodge their tax returns. So very important for first the broker to make sure they get their taxes in time, get the bookkeeping done on time because it's due on the 15th of May. And if you haven't, because not all brokers are on time when it comes to their taxes, make sure you speak to your accountant to get some sort of extension with the tax office. Because if you don't get that done, then there might be some penalties, there might be interest charges, and your accountant and obviously the banks aren't going to be very happy if you don't have your taxes done on time. So that's the first step. Then the next thing is talking about the end of financial year tips that you could do for your business first. And then I'll talk about maybe possibly the tax that the end of financial year tips that you could advise your clients as well. So
sounds awesome.
Yeah, sounds great. So the first one that's really important that I've been telling a lot of clients is the limitless asset write-off, which is what a terminology that I've given it. Back in the day, probably a year ago, before COVID, it used to be $150,000 where you could claim a write-off of 100% of an asset that you've purchased. It doesn't have to be a new asset. It could be a second-hand asset as well. So normally what would happen is when you do buy an asset, if there was no such thing as an asset write-off, you would have to claim the asset over the life cycle of the asset. So for example, normally cars are used for more than 8 years. And if you purchased a car for $100,000, just say it's a very expensive car, you would only be able to claim the car over 8 years. So, 100,000 divided by 8, I'm not sure of my maths because I'm not the best, but let's just say about $15,000 a year. So you don't get the full write-off 100K straight away. But this asset write-off has changed that. So the asset write-off used to be a limit of 150K. So any asset that you purchase, so for example, the car, you would have been able to claim 100% of it off. Obviously, there are some sort of limitations called the asset write-off limit for the cars, but you can normally claim the car write-off if it's a ute or a truck or equipment, and you can claim 100% of it, which is really helpful. Have you heard of this type of claim, or has your clients asked much about it?
Look, Davey, it actually has become really quite a topic that he's talked about a lot, and it all started when it increased to 150 to start with. So, and this time of year leading up to the end of financial year, we often see, asset inquiries from our brokers go through the roof because everyone's trying to purchase their asset pre-30 June. So, yeah. And for me, I guess I didn't really quite understand that either, is that you had to spread that cost out over, that year, over the 8-year period or 5-year period, whatever it may be, that now you can do it all in 1 year. So I think that, many brokers will probably have their finger on the pulse there, but guys who don't really, or brokers that don't really operate in the asset space probably may not know about this. So I think it's quite a good call out to let them know that they can claim more.
It's actually really, really important. And the thing that a lot of brokers need to explain is that you don't get that, because small businesses don't think of it, they don't understand it that well. And sometimes they think that if they spend $100,000, they're going to get $100,000 tax back. It doesn't work that way. What it is you're actually getting what the tax rate of the company or the small business entity tax rate is. So usually it's about 26% to 30%. So really they're getting a credit of 26% or 30%. And so you're not actually getting the $100,000 back if you're spending $100,000. So it's important for brokers to explain that to clients. So,
sure. And
what was that? Sorry.
No, sorry. It just made me think then that, does it actually matter whether it's a straight out purchase, whether it's a chattel mortgage, or whether it's a leased piece of equipment? Like, are there differences in how that actually works?
Yeah. So let me, before I jump into that, I just want to kind of explain how the write-off actually works. So, like I said, usually you're able to claim the write-off over 8 years, but now that $100,000 you can claim straight away. So assume that your business or the client's business was making, $200,000 in profit. If we spent $100,000 on equipment, now you can claim that $100,000 upfront instead of spreading over 8 years. So therefore, that $200,000 profit that you were initially going to pay tax on, it's going to reduce that to $100,000. So now you only pay tax on $100,000, which means that the tax rate, assuming it's 30%, is only $30,000 rather than $60K on that $200K profit in the first place. So that's kind of like how that write-off works. Just so everyone understands how that works. Cool. So what were you saying before about that second question?
So it's just saying, is there a difference in how the write-off works or how you can actually utilize it depending on how you purchase the asset?
Yes.
So whether it's, you pay for it outright, you get a chattel mortgage, you lease a piece of equipment, I'm assuming that's affected with this write-off piece.
Yeah. So I don't want to confuse, the brokers and the clients out there, but when you're borrowing money, it means that you're basically buying the asset yourself or the business is buying the asset themselves. If you're leasing, it's kind of another form of renting and you don't actually physically own the asset. So what that means then for tax purposes, it means that if you're borrowing and buying, that means you can claim it up front and use this asset write-off. So you can pretty much claim the 100K straight away. But if you're leasing, which kind of means you're renting, you have installments every month or week or fortnight, and you only get to claim that monthly installment or weekly or fortnight as we go. So it's pretty much, the same thing as the depreciation where you're claiming it over the life cycle. You're claiming the life cycle of how long that lease goes for. So you don't get the upfront claim straight away. So a lot of clients tend to go for the finance purposes and try to borrow the money and go get a chattel mortgage or a hire purchase, but it just depends on the client. It depends on what they can get as well. There's pros and cons on both sides, but most clients tend to like to buy the product and own it themselves.
Absolutely. And I guess with the chattel mortgage or the outright purchase, I can see, and please correct me if I'm wrong, because you are definitely the guru here, not me, but someone who's looking maybe to reduce their profit. So rather than getting it on a hire or lease purchase, it's going to have a positive effect on the amount of tax you pay by either doing it upfront as a whole purchase or through a loan. Is that correct?
Yes, that's correct. So essentially you're saving that 26% or 30% tax that you're going to pay. So for example, that example I gave before, they would have paid 60 grand in taxes if they had a 200K profit, but because they purchased it, now it's dropped to 100K and they're paying only 30% tax, $30,000 in taxes, which that means that they've saved that 30K, which they can use to, grow their business or, put it in their pocket.
Yeah, which is a great call out for brokers that, utilizing that through either of those two products means that may give them also the working capital that they need to grow their business, take advantage of an opportunity. So good call out, and probably links me into the next question, because you did talk about it before, but what write-offs are there out there that brokers may not know about, but certainly should be on their radar?
Yeah, so there's actually quite a fair bit. I can go on for hours talking about it, but let's talk about prepaying expenses. So the good thing about brokers is that there isn't that much expenses that you might have in your business. That's a good thing because you make a lot of profit. But there are some sort of expenses that you'll pay on a regular basis. So we're talking about marketing expenses, lease payments, rent, accounting fees, IT services, and insurance premiums. These you will pay for the next 12 months. And what I recommend to clients that have a lot of profit and they know they're going to hit a lot of profit in the end of the financial year is prepay those expenses upfront. The tax office says that if you're a small business turning over under $10 million, you can claim prepayments of under 12 months upfront. So if you know you're going to pay these expenses in the next 12 months, pay them upfront before 30 June and you get to claim those tax deductions first. So you get to bring forward those expenses.
Awesome.
Yeah.
Now, I've read somewhere over the last couple of weeks, and I probably should have paid some more attention, but talk to me about there's a way to minimize tax, but the tax rate's actually dropping.
Yes.
For business owners. Did I read that correctly somewhere?
Yes, it's actually been quite quiet. Not many people know about it because of obviously COVID, JobKeeper, JobMaker, and JobSeeker. That was kind of what was publicized the most and everyone was talking about. But the government did actually reduce the tax rates for small business owners. So this tax used to be 30%. It dropped down to 27.5% last year. And this financial year, so the 2021 financial year, it's actually 26%. And I believe next financial year, 2022, it's going down to 25%. And you can see the difference because personal tax rates are anywhere between 0% to 45%. And if you're making decent money, like if you're just an average Joe Blow in Australia, you're probably on that 32.5% or 37%. So it's actually quite attractive to run the business through a company and get that low tax rate of 25%.
Which obviously is another call out to make sure that you've got your businesses structured the right way, which again is where brokers can be really important to business owners. But certainly that combination of relationship between the accountant and their client is really important to make sure you've got those structures right so you can take advantage of the tax initiatives to put more money in on the bottom line.
Yeah, that's good. And also this is the perfect time to actually do a restructure. So you should restructure around June, 30th June, because it just makes life easier because you're obviously using an accounting software and you have to now move to a new structure where it's a company and you have to set up a new accounting software. You have to set up a new bank account. And it's just amazing where you could just do one tax return rather than two tax returns for a sole trader and then a company. Because if you transferred everything on the 30th of June or 1st of July, that means you only just need to do one tax return for that year for that entity rather than two if you transferred during the year.
So, Davey, tell me what's involved with a restructure and what's a typical type of restructure that you would see or that you've dealt with?
Yeah, so the typical one is obviously going from sole trader to company. And what you normally do is obviously speak to an accountant or set up a company or a lawyer and then set up a company. And then the next step is then you have to go and get an ABN and tax file number for that company. And then the next steps after that is you have to basically tell all your vendors that you're transferring from a sole trader to a company so they can update their details. So that means that you have to get a new bank account. You need to get a new update your invoices, your accounting software. It's actually quite a fair bit of work. It's tedious, but it's actually helpful because at the end of the day, you end up saving quite a fair bit in taxes, like 45% as opposed to 25%. That's like 20% in taxes. And if you're making, $200,000 or $100,000 a year, that could be $20,000.
Yeah, absolutely. And would I be right in assuming, and again, please correct me if I'm wrong, that really once you hit that GST threshold is when you really should be considering setting yourself up under a company structure?
For brokers, we normally do it early because the structure and the exponential growth is so fast because once you pick up a few clients, you get referrals. Like one client can give you so many referrals, and you're always working on multiple clients at once as well. You're not just working on one client throughout the month. You have multiple clients, and then out of nowhere, the next month you might get a big commission or big fee that payout. So that means that it's a really good idea to actually set it up from the start. But if you're a sole trader for now, I would say once you hit that 100K mark, that's when you should be thinking about moving over to a company, because the benefits of tax savings outweigh the cost involved in accounting.
Excellent. So, Davey, we're approaching May 1. What are the key tips that you can give brokers? And again, I'm sort of asking you to cover both because we want to support our brokers. So we want to give them tips for their own business that they can then take on to their clients. But we're about to hit the month of May. What are the tips? What do businesses and our brokers need to be doing?
Yep, sounds great. So the first things first is pay your superannuation. Because you're a broker, you're self-employed. A lot of you guys don't think about superannuation anymore, and you just spend like your profit as if it's all yours and it's your pay. But you need to be in charge of your superannuation, and it's quite important because the tax savings in a superannuation fund is quite it's the most you could get. It's 15%. And if you do the retire, it's 0%. So pay your superannuation before 30 June, and don't pay it after 30 June. Make sure you pay about 10 days before, because it takes time for it to process over. So I have some clients that pay on 30th of June, and it kind of rolls over to the next financial year, which is unfortunate because they don't get the tax deduction. Another thing they need to think about is getting their bookkeeping and documents up to date. It's important because you need to make decisions. I make my decisions every 6 months. So during May, June, and as well as during November and December. And that's where I decide, am I hiring new employees? Am I picking up more marketing contracts? Am I going to be picking up more clients? Or am I just, planning to just stay steady? So I look at my profits and I only can look at my profit if I do my bookkeeping and documentations. So, and then you got to look at your types of tax deductions that brokers can claim. So I did give you a list of, before about like the prepayments that you could make, but there are other types of tax deductions like gifts for clients. A lot of times brokers forget that if you're gifting a client a present because, they've done something great for you, they referred you a client, that's actually tax deductible. So make sure you keep the receipt. I have a lot of clients that actually, because I have a lot of brokers on my books actually give their clients vouchers. That's actually tax deductible. So if you're going to spend money on vouchers to give to their clients, you can claim those expenses. So totally 100% tax deductible. Paying yourself a decent wage is also something that you should be doing, because you're running a business through a company or a sole trader. You need to draw some money for yourself to, pay your mortgage, pay your entertainment expenses. So it's really, really important to think about that. Working from home expenses is also tax deductible. I have probably 50% of my brokers that actually don't have a physical office. They work from home. So if they're renting from home, they can claim a portion of that, especially when they have a whole office built just for their business. Travel expenses, because most brokers are always on the road. So motor vehicle, petrol, insurances, all tax deductible. Your telephone and internet, tax deductible as well. So they're the main things that brokers ask me about, and they want to know what type of tax deductions can they claim. But then there's also things about their clients. So I have some of my brokers that talk about, what should I be telling my clients? This is all great because I can claim all these tax deductions. I can reduce my tax. So they then talk about, what can I approach my clients on? Should I even be approaching my clients at 30 June? So that's where I remind my mortgage brokers that and commercial lenders that they need to talk to tell their clients to talk to accountants before end of financial year. So it's really, really important because they make decisions on lending, not just out of the blue. They decide and they think about buying a car or buying equipment 6 months in advance, and that's when it's important for brokers to speak to the clients and tell clients to talk to accountants before end of financial year to see what their numbers are going to look like.
So really, I guess what I'm getting from that too is that, it's super important to not just have these conversations once a year, but to be always checking in with your clients and asking those questions around their assets, around whether they need cash flow injection, whether they need upgrading of their assets, because obviously we know we've got some different opportunities there for our brokers to strike with their clients. So not only by having these conversations with their brokers, do they present opportunities, but they can also prepare their clients to take advantage of some great accounting tips that they may not know of, which will lead to again those opportunities we're talking about. You know, you can tell I've been on a week's leave, and then it was a public holiday here yesterday in Queensland because we are in May. It is already May. So I think having a week off and then having the public holiday has thrown me into a bit of a spin. So brokers, you need to be having these conversations with your clients now, and to get them ready. There's nothing worse than someone who has that conversation on the 27th of June and then is trying to make the purchase and do the finance and get everything done by midnight, on the 30th of June.
Yeah.
So just before we wrap up into sort of a bit of a summary, I guess, Davey, what are the questions that should be asked about assets? So what sort of questions should a broker be asking their clients about assets?
Yeah, so I actually ask my clients about assets all the time. So the first question I ask is, what's the plan in the next 12 months? Normally then that will tell you straight away what their plan is. And usually it's either to buy an asset or invest in their business and or to grow their business. And that's where you then lead the question to, are you planning to buy any assets? Do you have enough cash flow to buy any assets? Do you have enough cash flow for a rainy day? So then that's where you can push the question to, are you planning to buy upgrading your car, or are you planning to, buy equipment to invest in your business so you can grow more? Or are you planning to hire more employees? So I think employees are another form of assets. So that's why and that's where you can then ask them about their numbers, because that's really important to know. So I lead them then to saying, I lead my clients to force them to ask about accountants, because it's important for brokers to get in front of accountants as well. So that's where, you have a gateway to the accountant. It's very important for brokers. I deal with a lot of mortgage brokers as well, to speak to the accountants up front and have that face-to-face chat. So then the accountant and the broker can be transparent of what information they're going to be providing to the client. So once they get in front of the accountant, you're pretty much secure with the deal. The accountant now knows who the broker is. The accountant's going to probably be providing information to the broker. It's not going to be the accountant just doing taxes anymore. They know that they're going to have to provide information to a broker, and you've already spoken to the client about assets. So that's where it's quite easy now, because you've broken the ice, and you'll probably meet sometime in June, May. And then maybe once the client is ready to purchase that asset, then you guys can meet again to talk about the numbers and the financials and the tax returns.
And look, when we're talking about, questions around numbers, and, certainly for us here at Lend, we deal a lot in the alternate lending space. So we know that there's certain numbers that need to be looked at for brokers to be able to derive where a deal is going to go. What sort of value do you place in sitting down with a broker and their client when we're looking at complex transactions? How much value do you place on that?
Oh, I place a lot of it. I speak to the brokers all the time. So I actually speak to brokers pretty much every day. And we talk to them about, the loan schedules, the commitment schedules, how much repayments they have to, our client has to make. We look at the turnover, we look at the profit. We also look at the financials and tax returns. So yes, I place a lot of value in terms of like the relationship that we have with the broker and the client.
Yeah, perfect. And look, obviously, certainly I know in your business you'd be happy to, but having that meeting all together as well with the broker and the accountant and the client all in the one room certainly couldn't hurt either. Look, before we get into the last piece around being end of financial year ready, I guess, because I think that's a great place to leave our brokers, I just want to recap a little bit on what some of the opportunities are for brokers. And I think that this, rather than sort of, putting a clear derivative on whether it's for them or their clients, we can sort of run this as a general conversation. But what I really see is that the more that the clients, that the broker gets involved with their client and the questions that they ask, as you mentioned before, are they looking to purchase new assets? Can they afford new assets? Leads the broker into opportunities around different types of finance. So they may not have the cash flow to buy the asset, but do they have a very large debtors ledger that they could leverage some finance on to free up cash flow to buy an asset? So one, I think it's really important for brokers to get this literacy around accounting styles and tips and methods to be able to give them opportunity. Secondly, the tax, understanding how that tax write-off works, not only in their own business for purchases that they want to make, but also for their client, that it actually reduces that taxable income. And so therefore, you're right, you don't just get $100,000 back on your tax return, but it significantly reduces your taxable income. I think that is a huge call out. But lastly, I think too that brokers being involved in having conversations around the client's financials, bringing an accountant into the mix, into conversations, really allows that broker to get that stickiness with their client, where that broker becomes a necessary part of the client's business, whether it's 5 times a year or once a year, they're always going to return to that broker. So is there anything that you think I've missed out there as there's opportunity for the broker, Davey?
Oh, I don't think you've missed out, and you laid a really good point, is that brokers have to understand that it's not a transactional transaction for with their clients. It's actually a proactive relationship, an advisory type of relationship that you have to give your clients. And I find that the brokers that do that and know that it's actually advisory rather than transactional, that's the ones that are actually making the most money or growing the fastest. And the reason being is because if it's transactional, the client will just go to the next commercial broker or next lender, and they won't care too much about loyalty. But if it's advisory and a relationship, then they will always go to the same person. And you don't have to be providing all the type of services to the client. You just need to be able to talk about the problems and link or refer the right people to them. So that's why it's important to, speak to the accountant, speak to the client, work out what the problems are. And then if you're not the person to be able to solve the problem, then you can refer the work over to someone that can. But the great thing about doing that is that you're recommending someone. So you're building not just a relationship with that person that you've recommended or that business you recommended, you're building a good relationship that you're the trusted advisor rather than you just getting a good deal for the client once off. Because I've had so many clients that worked with a broker for many years. I'm talking about 10 years. And I've struggled to get them off working with another broker because I think this other broker can build a better deal. It's because that client is loyal to that broker because they've built that trusted relationship. So
absolutely.
Yeah, so that's why I think that's the biggest opportunity. It's not just transactional, it's advisory service, and brokers need to think about that.
Correct. And we know too, I know you deal with a lot of mortgage brokers, and so do we on our platform. And so I think it's really important to the more whole of business you can cover as a broker, from not just getting them funding, but you're right, taking that advisory piece into action as well is more vital now than ever. So I'm going to put you under the pump. In 60 seconds, give me 3 top tips to be end of financial year ready.
So claim asset write-off as much as you can if you make a profit. So if you're not making any profit, there's no point spending more money. Pay your superannuation because it's good and there's a good tax deduction for it. Prepay any bills if you need to prepay. Restructure if you need to restructure, and talk to your clients and get in front of the accountant so you can build that relationship. Is that 30 seconds or is that even just 20 seconds?
That was great. That was 5 top tips. So I love that.
Yeah, cool. Perfect.
Davey Mack, as I mentioned before, I'm really excited to have you as part of this accounting, small business accounting education piece. There is so much that can come out of this. We know that rules regs, initiatives change all the time. Really looking forward to being able to sit down with you again in the near future. And as we all know, collaboration is the key to recovery, which is so important for 2021. So to our brokers out there, if you're not working with an accountant, if you don't have a trusted advisor, go and get one. It will only improve your relationship with your existing client base. Davey Mack, guru in this space, thank you so much for joining our very first Lend ED Small Business Accounting webinar. Appreciated very much.
Thank you. Thanks for having me, guys.
See you next time.
See you next time.